Hi, it's Kristi Sullivan again of Sullivan Financial Planning. Today's video, I'm going to visit a topic that I do in my written blog called WTF, What the Finance. And What the Finance is geared toward helping people understand basic financial terms so that when you're reading the news or talking to your financial advisor, you feel more comfortable. The thing we're going to cover today, at the risk of getting too political, which I plan to not do, is the idea of a trade war. So what TF is a trade war? A trade war is what happens when one country decides to put tariffs on another country's imported goods. A tariff is simply a tax on imported goods. So for example, if a refrigerator were to sell for $1,000 that was manufactured in the US, and we had a tariff on imported refrigerators from China of 10%, then that same kind of refrigerator would cost $1,100 if you bought a Chinese manufactured refrigerator. And the thing that happens is tariffs are usually put into place because one country believes the other country has an unfair advantage on the goods that it's exporting into that country. So for example, let's say I manufacture widgets and the toxicity that gets put into the environment requires me in the US to put some mitigation in place, and it costs me money. So my widgets cost more to make in the US. But let's say my similar widgets are made in India and they don't have the same environmental requirements as I do to follow. Their widgets could cost less. That's not fair to me. I'm doing the right thing. I'm following my country's laws, but my widgets are more expensive. So my country, America, might put a tariff on widgets imported from India to level the playing field for me. What happens in a trade war is that one country says, hey, I'm going to put a tax on your cars or your steel that comes into my country too cheaply in order to protect the industry of my country that's making the same thing. The reason it's a war is that the other country will come back and say, oh yeah, well then I'm going to put a tax on your pork that you import or your technology that you import or your drugs that you import to my country, so those become more expensive to my people and they will buy locally. And these things tend to escalate. Who wins and loses in a trade war? Well, generally anything that is called a war, I think, is more losers than winners. But in theory, employment is protected in a trade war or a tariff situation in the home country where the tariffs are imposed on the incoming goods. In practice, that may not work because the raw materials are needed from the other country to make whatever it is the manufacturers are making in this country. And so that could actually cost jobs. Who ultimately tends to lose in a tariff war is, or a trade war, are the consumers. Because in the end, the price increases get passed on to the consumers on either end. So in my opinion, it's better to try to have friendly trade agreement deals that are fair between our competing countries, but not discourage international trade, because it really is best for the overall economy and the consumer. So that's a quick lesson on What the Finance on trade wars. If you'd like to see other What the Finance columns, I do a lot of these in my written blog. You can go to www.sullivanfinancialplanning.com to sign up for my newsletter. It's free and it's full of fun and interesting facts like what you saw on today's video. Thanks for watching and have a great day.